S&P 500 is testing a key support zone on the 4-hour chart. I will show what to expect and to see if there is going to be a breakdown or a bounce higher. We'll also look at dollar, which is showing a short-term pause with moving up, while gold stabilizes and so far hasn't really moved down. So this week was just basically nothing really happened as far as gold or gold miners. And we will look at some of the chart levels to watch and potential trade setups for gold and gold miners. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 7, 2025. As always, don't forget to hit the like button, share, make a comment in the comments section for YouTube, even a thumbs up or a heart or any kind of emoji in there would work. Don't forget to do that, because this will tell the algorithm for YouTube that this is an important video and more people should see that video. If you're a subscriber, stay tuned. We'll be covering quite a lot of stocks this week. Lots of ETFs, some of the large cap stocks, and several, quite a bit of number of what I call speculative securities. Stocks such as Chemours, MindMed, 10x Genomics, Fuel Cell Energy, etc. So stay tuned until the end. As always, I'm going to be using my proprietary MasterChartsTrading.com price action indicators, which you can sign up for by following the link in the description. Looking at the S&P 500, this is a daily chart, so each candlestick is a day's worth of activity. This is an all-time high that occurred on 29th of October, a couple of weeks ago. And since then, we've been basically pulling back more or less. Now, I mentioned that exact scenario. I pretty much nailed it. This is two gaps that I'm referring to, one between the 23rd of October and the 24th of October, and another gap between 24th of October and 27th of October. So a few days ago I said that very likely we'll be filling these gaps up. Lo and behold, we are indeed filling those gaps, and indeed we have filled those gaps. So these gaps are now completely filled, and there is no other gaps besides, that are like way out there from the June of this year. They're still there. They're just we don't know if they're going to get filled. Although it is likely that this gap will get filled the 23rd of June around 6,030, especially if we see a pullback continue to unfold, like a significant pullback, but not like gigantic or anything of that nature, not like a reversal into a bear market. So if we do get a pullback of around 8% towards this blue support resistance line, then this gap most likely will get filled. This is the gap from 23rd, 24th of June. Will it happen right away? No way to tell, obviously, but right now we're just, again, as always, taking we're reacting to what the chart tells us. We're not predicting anything of that nature. So on daily chart, this is the picture. We basically filled the gaps, and we're somewhere close to this green support resistance line. Potentially we might actually touch it, and by extension we'll retest these lows from October 10th, 13th and 15th here. It hasn't yet happened, and let me show you the 4-hour chart, which is quite telling. So this is a 4-hour chart. You need this particular security. This is ticker symbol US500, and specifically for capital.com, and it's an index CFD. CFD means contract for difference, not available to trade in the United States, but basically these are equivalent of futures for S&P 500. The reason why I keep mentioning the reason why I use this specific security is because it's continuous security, so it's kind of like Forex market. So we don't barely ever see any gaps on this chart. So there's that one gap from 24th of October right here. basically we've been pulling back since then. So remember, this is a 4-hour chart, so each candlestick is a 4-hour worth of activity. This is the reason why I want a continuous security. I don't want like this S&P 500. It looks quite different. So notice this is SPX, ticker symbol SPX on 4-hour chart. Notice where we're at right now, and notice where we're at on the continuous security. So significant difference. We need this continuous security, not the actual index. So notice what happened here for the past few days, 2 weeks. Here's the all-time high on the 29th of October. Pretty much we've been pulling back since then. On the 4th of November, I sent to my subscribers, on the 6th of November, but it was even obvious on the 4th of November. I sent this to my subscribers saying that this is oversold. So S&P 500 is already oversold around 4th of November. And continued to be so on 6th of November. Oversold means that the likelihood of a bounce is increasing. And since notice that on this chart we're in an uptrend, how do I know? We have closed above the blue line on this 4-hour chart. Actually a while back, we can kind of see there it is. The initial breakout was actually back in April on the 4-hour chart. And since then we had several opportunities, for example one back in August, another opportunity back in September, several more opportunities right here just recently in October, middle of October, and again we're making higher and higher moves higher. So this is basically the way we trade, is we look for opportunities to buy on a pullback towards the blue line if the security is in an uptrend. In this case, this is a 4-hour chart. This is intraday security. So if you are more of a short-term trader, it is valuable for you. So a pullback occurred on several occasions, and the latest one right there. So opportunity to buy also. This is a, again, 4-hour chart, so I don't normally send out alerts on such short-term charts. But if you do have TradingView and it's free, you can just get free TradingView and put in this ticker symbol with my indicators. Again, you can find out more about the indicators by going to the link in the description. You can see the same exact chart. So the opportunity to buy was on the 4th of November. You most likely have reached your target on the 5th of November and were stopped out a few days later, a few candles later. Today, notice what happened today. We saw a breakdown, significant selling, and then notice what happened. We landed on this red support resistance line. Again, I'm not making it up. I'm not drawing these indicators, to satisfy the way price action is going. No, it's the other way around. The price action follows the indicators, and that's why people find my indicators so valuable. Is it because without having to pay thousands of dollars for insider information, you can see the same information on the chart. It's right there. So notice what happened. We kind of landed on this red support resistance line, but we never closed below it. You can see, again, I'm not making it up. If we closed below this red line on a 4-hour chart, then we would have been short-term downtrend. Somehow we held support and a giant rally took place. So 4-hour chart, this is today's candlestick from 7th of November, from today, from 10 in the morning. Big green candlestick, so it looks like support has indeed been found, and so far we have avoided at least a short-term bearish turn. So let's continue waiting. Potentially, if you're a short-term trader, potentially I would be buying close above the blue line. If you're a longer-term trader, then your last opportunity to buy was where I'm hovering in May of this year. Okay, let's switch gears. I want to look at some of the Forex Forex setups. Here's Euro versus US dollar. I'm going to also go over US dollar versus Japanese yen and the dollar currency index. So let's look at that first. Dollar currency index. If you listen to my previous videos, I was saying that we potentially have a rally that could keep going. So far today, or I'm so sorry, on the 5th of November, on Wednesday of this week, we saw an attempt to break out above this August highs. So August high from 1st of August was where I'm hovering, right around 100 point mark. And indeed, on the Wednesday, we came up to exactly that level, 100 point mark. So far, we have been unsuccessful to break above that level. So the dollar currency index pulled back and is still, pretty significant. I think this breakout above this yellow support resistance line, so previous all-time 3-year lows rather, and now a breakout above the yellow lines. I think I just have a hunch about this, and it does feel like there is more room to run to the upside. I think dollar has bottomed. I think this might be the bottom, this 3-year low from September 17th, and I think we're done. So I think this resistance from August highs will be broken. I think we will continue up towards this red support resistance line, so another 1 or 2% or so. If we look at the Euro is a lot of dollar currency index, like 50%. So very similar, but just reversed. So it looks like dollar has been gaining and approaching and testing August highs. Euro was doing the opposite. So Euro was actually testing August lows, July lows, or August lows, right there. I'm not sure. I don't think it will hold. It just doesn't look like these lows are going to hold, and I think we will continue down towards this blue support resistance line. At that point, we'll need to make a decision of whether to buy Euro or do nothing. I think longer term, again, I think dollar has turned around. So I wouldn't want to be buying the Euro. USD versus JPY is one of the two currency pairs that are currently in favor of US dollar. In favor meaning that they're in a bull market, in an uptrend versus the versus the Japanese yen. So US dollar ascending versus Japanese yen. So in other words, I would be buying US dollar using my Japanese yen or selling Japanese yen. Alert was sent to my subscribers, and we're waiting for the target to be hit, which is pretty soon. I think is going to be hit. So in other words, right now we have at least US dollar versus Japanese yen, which is a sizable contribution to the dollar currency index, already in a bull market. So dollar is in a bull market already versus the yen. Euro again, I think, is turning around. I think we will. This could be like a head and shoulders, if anything. I don't know, something like that. Maybe that's what we're about to see. And if the head and shoulders is indeed going to be broken, then we need to watch this level for Euro versus US dollar, which is the marked by August lows. If there's a breakdown below those levels, I think we can see a waterfall event, and Euro would significantly weaken. So let's watch for this 1.138, 1.139 level. So basically the lows from August 1st. And again, why are we even worried about the dollar and the currency index and the euro, etc., is because we do trade gold. It's gold divided by US dollar. The bottom part of this equation is suddenly getting heavier, bigger, so it's pulling this currency pair lower. Indeed, this is what's happening. So, we can also look at this chart on the 4-hour chart for the gold. Can look at 4-hour chart for gold. It looks kind of weak. Notice that there was a breakdown below the blue line right there. It 27th of October, and no rally. So we did get oversold, but we couldn't close above the blue line again and rally. So right now we're, again, this is a 4-hour chart. Don't forget, this is a short-term chart. We're actually very finely poised. We could go up or down, and it all will depend on the dollar. If the dollar, strengthens even a tiny little bit, then we could, easily see gold move down towards the red line, possibly below. If dollar weakens again, we can actually see the opposite, and gold approach the blue line and potentially make a run for new records. It's also quite possible. So the levels to watch, either a breakdown below 3,900 for gold, because that's almost a guarantee that it will continue down towards like 3,700. Vice versa, if we break above 4,090 or so, then I think there will be an attempt to run towards the records. Okay, let's look at gold miners. So gold miners kind of similar to what gold is doing. They're also below the green line, but above the blue line. So they're like sort of in between. Again, if dollar strengthens, then gold miners will weaken, and again we'll be watching for a move towards the blue line. So another down 8% from today's price level. At that point we'll need to decide if we want to be buying. So previous alerts were basically just that. We've got a pullback towards the blue line and a close above it, and then we had alerts. So notice this upward facing arrows. This is basically that. So let's see if we get to that level and see if we continue down or if we bounce around $65. Alright, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up. Again, sign up one of the products. I have the trading indicators, so this lines on the chart, this green, blue, red, and yellow line, they're available for TradingView.com. You can get a free TradingView account. Once you get a free TradingView account, come back to my site, Master Charts Trading, sign up for one of the products, the trading indicators in this case, and I will open the door for you on TradingView. Yes, it's a little convoluted, but by and large, people are satisfied with the setup. And once it is set up, it's so easy. I mean, truly very easy. The other product I have is the newsletters. So I send out daily alerts about various large cap stocks, ETFs, etc., as well as speculative securities. So you can sign up for that. And the best deal is to get trading indicators and newsletters for the yearly subscription. So it's a $14.95 equivalent per month, or $599.95 per year, which is 17% off, or 2 months free. Compared to your regular monthly subscription. So sign up. You have 7 days free trial. You can always cancel, but many people do not because they find a lot of value with my indicators and with my newsletters. So sign up, try it out. And for today, head over to don't forget to hit the like button, subscribe to the channel, share, make a comment, even put a heart or thumbs up into the into the comment section on YouTube. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye-bye.